One of the things about trading the markets is when there's a slow period in the markets, which in my opinion, we've been in a pretty slow period here. There's nothing wrong with stepping away. And if there are certain things in your life that dictate that maybe your focus needs to be on something else, some other priority, and the markets are slow, it's kind of a gift from the markets to you, allowing you the time to go focus on those other things. When the markets are actively moving, as they will get back to at some point, it's a little more difficult to do if you have a desire to be an active trader. But the bottom line is trading shouldn't be the number one priority in your life. You should create a life for yourself that trading is part of, an active part of, a fun part of, and make sure that it doesn't dominate everything that you do. So that's just my personal philosophy about that. But I want to walk you through the charts because it's been, let's see, today's Thursday. It's probably been since last Friday since I really did a deep dive, my own personal deep dive analysis of my bar charts, which those of you who might be relatively new to the room or might be just sitting in and listening in for a little while to evaluate what we do, I want you to understand that the bar charts that I look at, I do so for the purpose of gaining a global perspective, kind of a macro view of where we are trading compared to historical patterns, what types of patterns are developing that seem to be consistent with previous patterns. And it just, for my personal benefit, it helps me understand a bit more about where we could possibly go from here. Now, don't be confused that I'm focusing right now on a bar chart, because in a few minutes I'm going to show you the Able Trend charts and we'll go through a comparison. But the bar charts for me are kind of like taking a 30,000 foot view of everything that's going on. But when I make decisions to trade, when I make a decision to take a trade, it's almost always going to be based on the Able Trend charts. And the time periods that I personally use are the 3, 9, and 515 on the indexes. And then I use the 515, the 30, 90 primarily on the stocks that I trade. So that's my personal suite of signals that I like to use. But if I'm going to take a short-term trade, because every trade that I start out with, almost every trade, is designed to be either a day trade or a trade that I can lock in a profit on without having to day trade, so legging into a spread. And both of those methods work equally well. They work in a slower fashion when we're in a very low volatility condition like we are now, but that's going to change. And if you get so into the weeds that you start thinking this is going to last forever, it's time for you to take a step back out of the weeds, take a look at the macro view, like I'm going to show you in just a moment here, and understand that patterns repeat themselves. Patterns will always repeat themselves. That's what the markets have always done. And the most common pattern that repeats itself over and over is when you have a rising cycle, which we've been in a very strong long-term rising cycle. I say long-term, it started on June 28th, but we've been in a rising cycle on each of the indexes. That cycle will absolutely, with 100% certainty, be followed by a declining cycle. The trick is understanding when that starts. And the other trick is if it tends to linger, the rising cycle tends to linger, or flat period of trading tends to linger, those patterns, although they are short term in the big picture, folks, they tend to wear on you. Now, I know it wears on Michael. Michael does a great job of following along with the signals and providing information in our live trading room every single day. But I know that I can tell when it's wearing on him because it wears on me. If your focus is tick by tick, signal by signal, and it just feels very flat, okay? It's more difficult to take positions in a flat range, in a flat market, than it is in a fast, rapidly moving market, which I find ironic because so many people, traders and experienced traders, I hear talk about, oh, the market's moving way too fast for me. I just sitting on the sidelines. I don't want to do that. Well, my gosh, that's when you want to be in the game. That's when you have huge amounts of opportunity. You could sit idle here in a very flat environment for an extended period of time. You might not actually be making much. You might be making nothing, but if you haven't lost anything, then so what? You've still got your capital. And then all of a sudden you get into a period where the markets are moving, the signals are popping, you're taking the signals based on the 3-9, 5-15 Abel trend charts, and you're either legged into a spread or you're out as a day trade very rapidly, and then you're recycling your capital over and over. In the live trading room, folks, we've had losing days. We've had one losing week, but we've had days like there was a Friday in January, I think it was the 17th of January of this year, where we made $17,000 in a single day. So if you can teach yourself, coach yourself to periodically step out of the weeds, step out of the constant focus tick by tick, and take a look at the big picture. What is the macro view telling us? It may help you uh, um, get to a level of patience when you're in a very flat time period. And I think that's, in fairness, where we are. I've not taken any trades for a few days. I've got positions that I have out there that I'm comfortable with right now. I've got a couple that I need to manage that are, further out in time. So there wasn't anything that I really felt I needed to do or wanted to do. It's kind of a ho-hum, not really an exciting market that I want to pay attention to right now. Once it starts to heat up again, this time period will be behind us. This period where maybe I'm not making anything, but I'm also not losing anything. And all of a sudden, you're going to get into a time period which could be a few days or it could last for a few weeks, where it just seems like it's rapid fire, easy pickings of profits, and you're going to be able to make some great money. And this slow time period is just going to be a thing of the past, something that won't be on your radar anymore. And here's what I advise: keep your awareness of these slow time periods in view, because you will be back to a slow time period again at some point in the future. And that's when you want to remind yourself, I just need to kind of take a look at what's going on in the big picture, so that I understand that before I revert back to now focusing on my tick by tick 3 9-minute charts, 5 15-minute charts, looking at green bars, looking at sell signals, buy signals. What do I want to do? All right, so that's kind of my preface. And I was grateful actually for a flat market this week. I want everybody to make money. I like to make a lot of money, but I was grateful for a flat market because life dictated to me something that I needed to focus my time and attention on. And so I've been away from the trading room this week, and I was away from the markets. But technology allows us to keep track of what's going on. So here's what's happening, folks. Um, I actually got very familiar with Siri on my Apple iPhone this week, because as I was driving, I could just ask Siri, tell me what the NASDAQ 100 is doing, and tell me what the S&P 500 is doing. Tell me what the stocks are doing that I'm I'm focused on. And because I'm aware of what my charts look like in the big picture, as the quote was coming back to me, uh, I was then aware that there wasn't any action that I would be taking anyway. There was no action that I needed to or wanted to take. So you can keep track of what's going on in your trading life when you step away from trading and maybe go spend a few hours on the golf course or spend a few hours with your kids or grandkids or out at the park or at the pool or taking care of something that you need to do where you relax a little bit. I'm a huge fan of life balance, uh, lifestyle freedom, but life balance. Lifestyle freedom is about being able to come and go as you please and be able to generate an income from wherever you are. Life balance is I don't need to sit in front of my computer every single day, 8 hours a day, focusing on each tick because you tend to start to get very jaded, feeling frustrated in a market that requires no level of frustration at all. It just requires a level of patience. If you aren't putting money in, then don't get frustrated. Just be patient. If you've put some money in and you had to cover it, okay, that's just kind of the nature of the beast. So let's move past that, and I want to talk a little bit about my personal macro view of the bar charts. Now, everybody's view is going to be slightly different. If Allison was doing this review on the bar charts, she might have a slightly different point of view, but I'm basing my decisions on my view of the bar charts. And so I'll listen to Allison's view. I look at what is going on my charts. I may kind of blend those views together. So it's okay to take on different points of view. It's okay to adopt another point of view, but make sure that whatever your view is, that it is yours, that you understand it, that it's not just because Mark said we're trading at a level of resistance, so that's my view. I want you to understand, if you're adopting my view, why you would embrace that view, what it is about my view that makes sense to you, that you can support. Okay, so think of it in terms of that. What I'm starting here with is a 1-year daily chart. So each bar is 1 day's worth of trading. And you can see that we have cycles up and cycles down. Okay, that's what the indexes do. We have some pretty long cycles down. We had a very deep cycle down here. I'm not even sure I can call that a cycle. It was last year in August, on August 24th. Geez, it'd be nice if we recreate that again. But anyway, it was the largest single point move of the Dow ever in the history of the Dow on that day, and the other indexes kind of followed along. Huge, huge sell-off that day. Well, it started from the indexes trading at a high, and that high had completed, that rising cycle had completed, and so we were anticipating a declining cycle, but there was a more dramatic sell-off. Okay, so you have those types of patterns on the NASDAQ 100. They are historically proven. They repeat themselves over and over and over again, not in exactly the same way, but in the big picture view, you're going to have a down cycle that will create after this rising cycle completes. So one of the first things I attempt to do is to determine, is the current level of trading consistent with a prior level of either support or resistance. So what we have here are 3 time periods that I have levels of resistance identified on my chart. The shortest time period is this rising channel right here. That's the shortest time period that I've identified, and it comes across this set of tops, it comes across this bottoms here, just need to extend that out, and it comes across the bottom that we hit before we started this rising cycle, okay? So that's level of resistance number 1. Level of resistance number 2 is something that we've all been tracking for a few weeks now, and it is identified in red here. And I'm going to show you that we've now moved right at a point where that red level of resistance is tying back to two prior levels of resistance. So that's actually very consistent with what we've been showing for the last several weeks. And as the price of NASDAQ 100 has moved slightly higher, just ticked ever so slightly higher, I've been adjusting that red channel, just shifting my resistance ever so slightly up to capture what the market has defined as a natural level of resistance, a natural level of resistance. So a natural level of resistance is where you have a bar that hits a high, and all of the bars leading up to it have lower highs, and all of the bars leading away from it have lower highs. So let me just double check this here. On the 9th of August, we hit a high of 48.1101. Okay, the next day the high was 47.99, so it was lower high, but today we've hit a new high. So today's high is the new potential natural level of resistance because we've hit a new high today. Now we won't know if that's actually the market defining a market top or if there's still more to go. We don't know that yet. So this is an exercise for me personally in building something that out in the future, I'm going to have a better sense for where the market is trading relative to long-term patterns. Right now, I don't know if today's high is a new market top, a natural level of resistance, and I won't know that until I start to see a series of price points with lower highs leading away from that high, today's high. Okay, so I modified my red channel to capture today's high, and I can still see that it ties back to the highs back in early November. It ties back to the natural level of resistance that occurred in early December. And then I have this low here. Now, what's interesting to me is, well, let me say one thing before I tell you what I think is so interesting. The fact that we only have one level of support, the fact that we have only one level of support makes me a little suspect as to whether or not we have completed our rising cycle yet. And the reason I say that is because this level of support acts as a way for us to identify not only the width of the range of movement, but it helps us identify the slope or the angle of the channel. Is my channel increasing? Is it a rising channel or is it a declining channel? And when you have only a single price point on the low, then it can act as a pivot point, which means that the angle of the channel can change. So if we continued to press higher, then my resistance would move higher and it would pivot on that single support point, changing the angle from being a slightly rising channel to maybe a more significant rising channel. Now, the fact that it would be a rising channel or it is a rising channel doesn't mean that we won't have a down cycle. Don't confuse those two things. We absolutely will have a down cycle. I mean, look at this rising channel right here. We had down cycles within that rising channel. That just is something that happens. It's guaranteed to happen, that you're going to have down cycles. Now, what I find interesting is it wouldn't really take much more of an alteration, a fine tuning of this channel to be at a point where this level of support would tie back to the August 24th support. And what that would mean is that there would be some room there may still be some room for NDX to move higher. Okay, so bottom line here is we have not yet determined where our market top is, but there's something very, very dominant that is coming into play here. And that is that today's high is 48.1336, and the all-time high of NDX is 48.1635. So we came within 3 points of the all-time high on NDX. And if you just want a clean view of that, you can see that the last time we had a high that was this high, that was in this range, was in March of 2000. Okay, it's a pretty significant sell-off after that. Call that the tech bubble. Then we cycled higher until we sold off, down cycle in late 2008, early 2009. And then since then, we've been in a very strong rising channel, rising pattern. Now, we've had sell-offs during that period of time. That's going to happen. More recently, in the last less than a year, we've had more significant cycles. Volatility started to kick in pretty significantly beginning back in August of last year, where we had that major sell-off, completely rebounded. We had another major sell-off, rebounded, sell-off, and basically we're in a strong rising pattern right now. But my personal takeaway from this, folks, is when I step back and I look at that big picture, and I'm coming from the standpoint that history in the markets does repeat itself, not always to the same price level, but the patterns repeat themselves. So is there a chance that we're going to see, after this strong movement higher, and we seem to have stalled out, we seem to have lost some momentum at this strong line of resistance, is there a chance we're going to see a more significant downward move? I don't know the answer to that. It certainly would not be out of the question. Will we see a strong downward move down to where it took us in late 2002, which was 795? Will we see that? Well, I can't tell you that that's going to happen, and I'm not predicting it's going to happen, and I'm not trading based on that potentially happening. But let's not be foolish here and say, oh, that would never happen, and start arguing in favor of those types of movements never happening because I know so much about the jobs, stability in the country or the economy or everything going on in the world or the presidential election or all those things. If you just strictly look at patterns, historical patterns are going to tell you movements up happen and movements down happen. We have been in a strong movement up since March of 2009. Within that strong movement up, we've had some down cycles. And this is where I think it's really important to get out of the weeds and take a strong look at kind of a global, macro view. We're trading 3 points off of the all-time high, 3 points off of the all-time high. That speaks volumes, in my opinion, about where we could potentially go. We may continue to climb higher. I mean, and I'll show this to you here in just a minute, but when I look at the 3090 and the 6180 Able trend charts, the 6180, that longer term time period, is still double stacked to the upside. So there may still be some room to move to the upside. And the way I translate that into my simple view on NDX is, my bar charts, is does that mean that we could potentially see the channel angle shift to a point where my low, which was back in February 8th, may tie to the low on August 24th. So is that possible? Let me come off of the low of August 24th and connect to my low on February 8th. And then I'm going to connect to the high back here, these two highs. And there's a projection out there that's actually above the Bollinger Bands. But it says that if we continued on this rising pattern, we could potentially see NDX forecasted out, let's just say September-ish, to the 49.36 range, okay, 49.30 range. Okay, that's not at all out of the question, just in terms of simple placement of support and resistance and where that could project out to. But we need to break through this strong line of resistance, which is an all-time high. And when the markets start to move towards or trade at their all-time highs, they tend to lose momentum. They tend to lose momentum. It doesn't mean they won't form new all-time highs, but there is a much lower level of momentum. So that's kind of my 2 cents worth on that, on NDX. I see that we could move up to that 49.30-ish range. I also see that if I ran out my current rising cycle, if I extend that out, that we could be trading down around the 43.08 range. So call it 500 points below where we're currently trading. I don't know where we're going to move to. What I do is I isolate my attention onto the current day's trading activity, and I want to clearly understand whether the market is telling us that it has formed a top. So what I'd be looking for in the next few days is price points leading away from that high that we formed today, which is only 3 points off of the all-time high of NDX. So let me just show you one intraday view on a 60-minute, and I'm going to put on the other studies. The 60-day intraday view is telling me that momentum is really starting to weaken. That you can see now how dramatically price is flattened out. Doesn't mean we won't go higher, folks. I want to be very clear about that. But price is flattened out, and momentum is significantly weaker than it was just a few days ago. So when you have weaker momentum, as evidenced by this declining Twin Peaks pattern on the AO, and you have flat price, it generally means that price is going to follow. When I say follow, it doesn't mean that that's going to happen today or tomorrow. It just means that we're starting to run out of steam. We're starting to run on fumes, but there might be enough fumes to get us up to the 4900 range, 4930 range. I don't know that yet, but that's why I'm staying very focused on what I'm seeing the market offer us as a indication that we're trading at a high. We've also been in a pretty significant rising cycle. Michael talks a lot about the time period of the cycles on the Able Trend charts. When you start reaching on the short-term time periods, a cycle that's been in place for an hour and a half, 2 hours, you want to start being a little suspect. I treat this the same way. We've been in this rising pattern since June 28th. Today is August 11th. So we've been in this rising pattern for about 6 weeks, and it's going to come to an end at some point, and then we'll see a move down. So let's take a quick look at SPX. SPX has some similarities where there is a line of resistance that you can see for the last 5 trading days, including today. SPX has been trading right up against this line of resistance. Now, what I also find interesting about SPX is that right now, although it's slight, right now there is a Bollinger Band snap pattern on the daily SPX chart. That by itself is an indication that there is an increasing likelihood of some sort of a pullback. Now, a pullback could mean a few points. It could mean a bit more, maybe just down to the lower Bollinger Bands, or it could mean a reversal of the trend and we start to see a declining cycle. But if you just look at these last 5 bars and you see how we've traded right at the upper Bollinger Band and right along a long-term line of resistance, and then go back and look at this whole set of bars here, that although they're standing just below the line of resistance, they're very much in sync with that line of resistance. So for all practical purposes, folks, I could go back to the 14th of July and you can see that basically S&P 500 has been trading in a very flat sideways range. One strong movement to the downside took us to a low of 2147. That happened on the 2nd of August. The highest high that we've had since the 14th of July is 2187.66. That happened 2 days ago. So that's the range that S&P 500 has been in. It's a pretty tight range. You can see just visually on a bar chart, it's not trending higher. It's not trending lower. It's not forming a declining channel. It basically has been in a very, very tight sideways pattern. It's going to break out of that pattern because the markets won't stay in those patterns forever. You can go back and confirm that for yourself historically. It's going to break out. My guess, my best educated guess, is that there's a higher likelihood of the breakout being to the downside. Now, don't confuse a breakout with creeping price, higher price. Don't confuse a breakout with just slightly lower intraday movement. That's not a breakout. A breakout to me is when the price breaks substantially lower and you start to see 2 tops and 2 bottoms that are clear evidence of a declining cycle or declining channel like we've seen back here. Let's take a look at a 2-year time period on SPX so that you can see where we're trading relative to where we had previously identified, or the market had identified, a natural level of resistance, which was back here in late May of 2015. And then our support, our natural level of support, really is coming from the price bar on the 12th of February, but there was another support point that was very close to that, which was at the end of January. So that's the range of movement on SPX, but I personally believe it's very telling when you look at this and see how we've stalled right at that line of resistance. And we didn't just come up, hit it, and pull away. We've stalled there for the last 5 days, 5 trading days. I mean, yesterday was the lowest high of the last 5 trading days, and today's high is 2187.26, which is only 40 cents off of the all-time high that SPX formed, a new all-time high 2 days ago. So that's where I see that. Let me just put up an all pattern here on SPX, and you'll see what that pattern looks like. You know, there's another channel I could put on here. I usually don't come back this far to form channels, but you can see that there's another channel that comes off of the high that formed in February of 2000, cycle down. This current pattern, I'm coming off of the high that formed in September of 2004. So 10-year view is generally a pretty clean way to take a look at the big picture, a macro view. And let me go to a 5-year here. And 5-year you can see clearly where we're trading, and actually leading up to last week, we were having Bollinger Band snaps too. So there are lots of pattern indications that are hinting at being possibly close to a declining cycle. And the only reason, folks, that it's important to me to know whether we're closer to or further away from the next cycle, whether it be a rising cycle or declining cycle, is that when I look at my Able Trend charts and I start choosing positions, where that macro view has, what that macro view is telling me is going to influence partially the strategy that I may want to use to take advantage of one of the signals on Able Trend. It may also influence how I want to implement my position. I may choose to day trade, that's my strategy. I may choose to buy a long call or buy a long put, but the placement of my strikes is going to be different if I believe that we are close to a top than if I believed we are not, or we're close to a bottom. The placement of my strikes on each of those, buying a long call or buying a long put, is going to be influenced by the placement, is going to be influenced by my macro view. So this for me is kind of building my model, starting with my macro view, then finding my signals and leveraging my macro view to decide which strategy to use and the placement of my strikes. RUT, the third index that we trade, very similar to SPX. The last 5 days have been trading right at a sideways line of resistance. You can see that that resistance ties back to highs as far back as the 17th of September of last year. And then there were 2 other time periods that confirmed that level of resistance. And then support is defined by February 11th. And we've been in a rising channel since. So it would not be out of the question at all, in my opinion, to see RUT cycle, not move immediately to, but cycle back down to, depends on what time period we would hit this support, but cycle back down to the 1146 range. It's about 80 points or so, 84 points below where we're currently trading. And if we did that, we'd still actually be in a rising pattern. So there's about an 84-point movement that we could see RUT make, and it would still be an overall rising pattern. I want to just look at 2 stocks here real quick because I've got a position on Priceline. I have 2 positions on Priceline. I bought myself a lot of time in opening the Priceline positions. Both of them are puts. Both of them were set up originally as one was a, well, they're both diagonal spreads, and we bought to close the shorts on those. And so we've taken some really nice profits, and now we can afford to wait a little bit. One of my long puts expires in September, one of my long puts expires in October. So I've got a lot of time on my side, and when I see that macro view of the overall market, S&P 500 and NASDAQ 100, it tells me that the markets are going to move lower at some point. Is a September and October expiration enough time to make that happen, to allow that to happen? I don't know yet, but that's something that I need to evaluate on a daily basis. So Priceline is showing to me a little bit of movement higher after a huge Bollinger Band snap, a little bit of movement higher here on the last 3 days. Nothing significant, trailing right along the upper Bollinger Bands. We've got a pretty significant oops pattern to recover to satisfy back down to 1363. So let's say 60 points below where we're currently trading. So there's a pattern here, a very simple pattern that says trading at the upper Bollinger Bands with that big of an oops pattern tells me that there could potentially be some weight to the downside in the near future. We just have to wait and see when that's going to occur. Let me just see what the studies are showing us. Right now, the daily AO is still showing rising momentum, so we may continue to see movement higher. Now, how does that play into my current positions? I only have one contract, so if we did see movement higher before AbleTrend indicated a sell signal, that's fine. I would then look to add one or two more contracts to my position and take advantage of the next sell signal and a movement lower. Now, the 60-day, 60-minute chart on the AO is showing that intraday is expressing some pretty significant decline in momentum. So momentum is weakening when you have an intraday view. So overall, my personal opinion is that we're going to see some sort of a decline before too long. It has to occur because we've been in a rising cycle, and the next cycle that will occur on stocks or indexes, the market overall, is going to be a declining cycle. So, it's also not lost on me that we've got just a few months here before the presidential election, and that the markets are influenced tremendously by the presidential election and anticipation of that and the outcome of that. So we don't talk politics here, and that's not what I'm getting into. I'm just saying it's a reality that the markets will have some influence from the election. So those of you who like to study things, you can go back and look at historical models if you want to that talk about election shifting to Republican versus election to the Democratic Party. Do those different outcomes have a consistent pattern that is reflected in the markets? I've read tons of that stuff over the years and have a small sense of it, but I'll let you do your own research on that. So though that's the primary stock that I'm tracking right now, I do have a Google position out there. Google, you can see, has been trading pretty much sideways, and on the 1-year daily, you can see here the last 3 days, we've pretty much stalled out right at this line of resistance. And today, I believe, is a new all-time high for Google's Class C stock. So new all-time high at a level of resistance. Momentum has flattened out a little bit, but certainly not showing any indication of weakening yet. Let's look at the intraday. Intraday momentum is showing very, very dramatic decline in momentum. So those are all the clues that I look at to help me understand where we could possibly be headed. Let me just jump over now here for a minute to, hang on just a second here, folks. I'm going to jump over to AbleTrend and complete my analysis. Okay, so you should be able to see the AbleTrend charts here. If I just look at the longer time periods on NDX, the 3090 and the 6180, well, we're still double stacked to the upside on the 3090. There was this brief period here where it looked like we might be breaking below, but it didn't follow through. The 6180 is still double stacked to the upside. So there's nothing yet in evidence that tells us that this index has weakness. So where that corresponds to my bar chart, well, we haven't yet seen any evidence of a declining cycle starting, but we are reaching a level of resistance that's an all-time high, and so we're just going to keep an eye on both of those. If I take a look at Uh, SPX, same thing. We're double stacked on the 30-90, double stacked to the upside. And the 6180 is not quite as clear, although technically we're double stacked, but we do have a line of resistance that's starting to print. It's very interesting, though, that that line of resistance started to print, but we stair-stepped higher on support. So that means that the range is tightening. And we saw that on our bar charts where the price of the index has pretty much flattened out the last few days. And RUT, the 30-90, we have been very flat as we saw on the bar charts, but we are printing resistance, and we're just kind of stuck in this very tight range between support and resistance. And then the 60-180 is the same thing. We've been pretty consistent 180 support. We dipped below it, but never actually, support never actually went away, and now we're printing resistance. So there's really nothing inconsistent between those time periods. And so all of that tells me, the translation of that for me personally is we're getting much closer to the next cycle, which would be a declining cycle. And if I'm going to take a position today on my 3 9-minute and 5 15-minute time periods, here's what I would do. If I saw a signal to go long on the indexes, I would be okay taking that signal, but I would buy to open a strike that is well out of the money, maybe a 35 to 40 delta, far enough out of the money. And the reason I would be doing that is because, in my personal opinion, there's less momentum to the upside. And so if the stock or the index doesn't move enough for me to lock in a profit as a day trade, or to secure that by legging into a spread to the upside, then I can very easily create a credit spread, a call credit spread, by selling to open a strike closer to the money. But if I'm going to do that, I want it to be done in such a way that the whole spread is out of the money. So that's kind of giving myself an out right from the get-go. I'm not just jumping into the trade and then trying to figure out what to do. I'm planning the placement of my strike, anticipating that if I have to manage, that I would be able to turn it into a credit spread. If I saw a signal to go short, because my personal bias is that it's likely that we're going to move lower sometime in the very near future. Now, that could be tomorrow, it could be a month from now. I don't know when that's going to be, but the longer we stay in this rising pattern, the longer we show a sign of stalling out at a level of resistance, the closer we are to experiencing that next down cycle. So if I had a sell signal that I wanted to take and open a position, I would be buying to open a long put in the money, Now, I don't go quite as deep in the money as Michael does, but I might go to like a 60 delta, and I'd be going in the money because I think there's a greater likelihood of a movement lower. But if in fact the index moved against me first and I felt it was important for me to cover my position, what I would then be able to do is to sell to open a strike that is lower than the one I bought to open, and I would create for myself a long put vertical spread where both strikes are in the money. And you want both strikes to be in the money on a long vertical spread. So in both of these scenarios, my macro view of the bar charts is influencing my placement of my strikes so that I leave myself an out if in fact the index moves against me. But bottom line is, I'm not opposed to taking the signals even though it's a signal that is telling me to maybe go long, move higher in an environment where we're getting to some pretty lofty levels. Who am I to say that we won't go up another 100 points on NDX? I don't know that we won't. So I'm willing to take the signal if it makes sense based on the rules we follow for able trend, but the macro view that I've just shared with you is going to help me understand, help me define for my own personal trading where I might want to place my strikes, because I'm already building in to my strategy an out if I need to take it. So a little bit longer of an update today because I've been away for a few days. And here's the bottom line. Not much has really changed in the last few days that I was away. We're still trading in tight ranges. We're still stalling out at levels of resistance. We're creeping a little bit higher, but we're still trading for all practical purposes at pretty strong levels of resistance. And we're just looking now for our able trend signals to take those signals and to make some money. It's been kind of flat. I know from speaking with Michael, it's been really flat in and the indexes. I mean, this 3 9-minute pattern right here on NDX is very difficult to take a signal and feel confident about it. So you're getting into this very, very, very tight range. This actually, folks, might be a time you want to go play a round of golf or jump on the motorcycle and go for a ride or do something else and step away. Because there's not a lot of activity. I know Michael has not been taking a lot of trades. He's been trying to point out signals for those of you who are looking for new trades. Michael's not taking a lot. He's got some trades that he is waiting to close out. I've got some trades that I'm waiting to close out, so I'm not taking new trades. But it doesn't mean that we can't follow the signals and pay attention to those that might be valid for those of you who are looking for a new trade. So I hope that's helpful to you. We're just going to continue to monitor the charts and look for signals. Like I said, I'm not taking anything new right now, but that might change tomorrow. So that's the mid-market summary for today, folks.